The ADP National Employment Report comes out this morning, much lower than expected as far as jobs created. And the GDP figure comes out hotter than expected. What does this mean for your investments? We're going to cover it today in today's Market Minute. Well, right out of the chute this morning, the ADP report expecting 200,000 new jobs to be created. Only 124,000 were created, much lower than anticipated. So that pressure on jobs, we're starting to see that recessionary number coming in as far as jobs in front of the jobs report coming out this Friday. It's usually a precursor of what we can expect on Friday. So that's what the Fed's looking for is less employment. I know it sounds like a strange thing to look for, but that's what they're looking for to reduce the hikes that they're doing right now in interest rates. The market responded positively to that news in spite of the GDP coming in at 2.9% annualized as opposed to 2.7% for third quarter. So that coming in a little hotter, offset by that jobs report. However, the big news today, which really didn't make it on the list of economic reports, Jerome Powell was speaking today, and that hit the wires at about 2 o'clock today, 1:30 actually. And the tone of that was very dovish. In other words, slowing down the rate at which the Fed intends to raise interest rates as early as the next meeting, which is December 13th, December 14th. So we're going to see probably a 0.5% increase at that meeting. That's what's already baked into the pie, by the way. So as far as mortgage rates are concerned, we're not going to see a big swing. What we have seen is the 10-year Treasury, which is a really good guide as far as where the mortgage market wants to be. That is in 3.75% range right now, hovering between 3.6 and 3.8 is what we're seeing. And at this moment, we're at 3.73. That's the 10-year Treasury. It looks like the bond market is screaming a recession because the 2-year Treasury is yielding a higher rate of return than the 10-year Treasury. And so what that means is we're looking for interest rates to come down. What does this mean to you? If you're a realtor and you have your clients in escrow to purchase a home right now, you want to advise them to lock as it's available right now, especially in the shorter term closings within 2 or 3 weeks. Beyond that, you might want to cautiously float those loans because interest rates, it's anticipated the interest rates are going to start to come back down here soon. And so that's what you want to do. As far as the stock market, all three indices were up on that news. It was dovish as far as interest rates. The bond market loved it. The stock market loved it. All of them are up about 1% to 2% this morning. If you found this information useful, drop a like below and be sure to subscribe to our channel. And for our most recent Market Minute, you can find them right here. And for our Lessons in Lending series, what to expect when purchasing a home, the borrowing process, you can find those lessons right there. Again, my name is Brent Starts with Unitas Lending, and this has been your Market Minute.